All right, gang, it's your boy Nature, aka Nature. Gang. All right, so you'll see this yellow Marubozo candlestick form at the end of a downtrend, letting us know that reversal is likely, or at the end of an uptrend, letting us know that continuation is likely. All right. So next candlestick pattern that you'll see, single candlestick pattern that you will see in this market is a hammer. Single candlestick pattern is a hammer. You'll see this candlestick pattern as well. Single candlestick pattern right here, a hammer, is also another candlestick pattern that you will see at the end of a downtrend. Okay, so single candlestick pattern, as you can see, single candlestick pattern. I just want y'all to be able to recognize the candlestick patterns as you'll see them frequently in the market. All right, so learn how to recognize single candlestick patterns. This is the second single candlestick pattern that you'll see at the end of an uptrend. At the end of a downtrend, signaling a potential market reversal. Okay, so it is a hammer. Okay, you'll see this at the end of a uptrend, end of a downtrend. Sorry. So you'll see a hammer at the end of a downtrend. The hammer is a bullish reversal pattern that formed during a downtrend. It is named because the market is hammering out at the bottom. Okay, so when price is falling, and the hammer signal will be at the bottom, is showing that price is near its end, and price will start rising again. So you'll see this hammer candlestick pattern after price is falling, in a downtrend falling, and you'll see this candlestick pattern appear at the end of a downtrend, letting us know, signaling that that this downtrend is near its end, and price is now starting to rise up again. As you see this hammer candlestick pattern, it's going to be yellow for us as you see it, and now it's letting us know you can see prices rising up again. So I just want y'all to be able to recognize that in the market. It has a long shadow body. It has a long shadow or wick that indicates that sellers tried to push price lower, but buyers were able to overcome this selling pressure and close near the opening. So when you see a hammer pattern at the end of a downtrend, doesn't mean automatically place a buy order. We need more bullish yellow candlestick formations is needed before it's safe to pull the trigger. All right, so it's all yellow candlestick formations. That we ran over all the black candlestick formations. This is now the yellow candlestick formations that you will see in this market. The hammer formation, say yellow candlestick for us, and as you'll see at the bottom, and it's hammering out the bottom. It has a long wick hammering out at the bottom. You can see a long wick hammering out at the bottom as it creates a hammer pattern. It's going to be a yellow candlestick hammer pattern for us. So it's very extremely important that we recognize the candlestick patterns. It'll have a long shadow or long wick, about 2 or 3 times the real body, and little or no upper shadows. It won't have an upper shadow or an upper wick. It won't have one, or have a little wick or no wick. And the lower wick will be twice as long as the body. The body will be small, and the wick will be longer than the body, than the yellow body candlestick. Okay, so the color is not that important, but it is important. All right, so I'm gonna show you this hammer pattern. It is a bullish reversal pattern formed during a downtrend. So you'll see this most likely form, and it will appear during a downtrend. Once price is done falling towards the downside, you'll see this hammer pattern appear out of nowhere, signaling that price is starting to rise up again. All right, so let's go to the charts. I will show y'all the hammer pattern. You see we have our yellow Marubozo candlestick pattern. Letting us know that buyers are in control the entire time, right here, a few times in the past. Now I'm going to show you the hammer candlestick pattern. All right, so hammer candlestick pattern right here, boom. You see it, one right here, boom. You see the wick is the wick right here is long, right here, long wick, and it's twice the size of the body, and it's after a downtrend. If you see we was in a downtrend, candlesticks below this trend line, you'll see it form after a downtrend. as sellers try to push price down. Sellers try to push price down. It opened at 1770. And sellers try to push price down to 1753, but buyers push price back up from 1753 all the way up to 1777. And it's called a hammer pattern. It's a single candlestick pattern that you will see in the market a lot, and it'll let you know, okay, we're now in an uptrend. As you know, selling pressure is now done. It'll let you know that, okay, now we're rising back up, and now we're in an uptrend. So you'll see this hammer single candlestick pattern at the end of a downtrend. Okay, and it's a reversal candlestick, yellow candlestick reversal pattern, letting us know we're in an uptrend. As you can see, after we see this hammer pattern, this single candlestick pattern, the wick will be twice as long as the body, lets us know now we're in an uptrend. So you'll see a hammer pattern a lot. As you can see in the past, you can see more hammer patterns. Like right here, show you another one, show you a few, actually, if I can find a few more. You'll see them in the market though a lot. Like this one's right here too. Here's one right here. Boom. This was on December 15, 2021. We see another one right here. Boom. Right here. Boom. Hammer stick pattern right there. See a single candlestick pattern as I zoom in. Boom. See the wick right here is twice as long as the body. And then you see it hammering out at the bottom after this downtrend from January 31st, 2021 to December 31st, 2021 to January the 3rd, 2022. We see this bearish engulfing pattern and this even star pattern letting us know we're in a downtrend. After that, you see a hammer pattern from 1790. Sellers try to push price down to 1783. Buyers push price back up to 1798. After you see this hammer pattern, now we're in an uptrend. You see this hammer pattern right here. The wick will be twice as long as the body. Sellers try to push price down. Buyers came and push price back up, creating this hammering out at the bottom. Now we're in an uptrend. So you'll see this candlestick pattern. It's a single candlestick pattern. You'll see that that's one of the most recognized candlestick patterns that you will see in this market is a hammer. All right, so I want y'all to just be aware of that. You will see it. You could say this is a hammer too. Boom, from here to here. Could be another hammer, single candlestick pattern. So pay attention. You'll see this candlestick pattern a lot. Single candlestick pattern hammering out at the bottom. At our take profit 3 area, and hammer at our take profit 3 area. And it started rising back up. You'll see it at key areas. Our take profit area. You see this hammer at take profit 4 area. You'll see it at the end of a downtrend. So lets us know that now we're heading back up after we see this hammer off of take profit 3. Price headed up from take profit 3 all the way back up to take profit 4. So it went past take profit 3, take profit 2, take profit 1, take profit 2, take profit 3, all the way up to take profit 4, 1828, 1830 level, take profit 4 from this take profit 3 all the way up to this take profit 4 up here, passing this take profit 3. So when it hammers out at the bottom like that on the daily, it lets us know that we're in an uptrend. As you can see, it bounced it and hammered out. It hammered down at the bottom off of take profit 3. All right, so I just want y'all to just be aware of that. You see the hammer here, here, and here on December 15, 2021. You see the hammering out at the bottom. December 31st, 2021. You see a hammer out at the bottom at a take profit 3 area, and going back up to take profit 4. And you see another hammer at take profit 4, and price went up from take profit 4 all the way up to take profit 4. All right, gang, it's your boy Nature, aka Nature. Gang.